What's up, Mortgage Coach community? I am super pumped because I'm doing the first of a new type of Mortgage Coach YouTube channel interview. I've got Spencer Schultz, who is the leader of training here at Mortgage Coach and Sales Boomerang. He goes by strategist. So think of Spencer as a strategist here to help our lenders crush it. You know, when it comes to turning data into dollars, when it comes to helping you guys make the most of market trends like the one I think we're beginning to see. Spencer's here. What's up, Spencer?
Really excited to be here. Thank you so much, Dave, for having me. And I'm really fired up. And my goal here, guys, I'm not the wise man. I used to be an LO myself. I had a team under me and got into data and analytics, ended up at SBMC. But I've had the pleasure and the joy over the last year or so to really interact with thousands of LOs like Amit here, who has so many sound strategies and approaches and the way that you're able to present yourself genuinely. You got your Lakers stuff in the background. I've got my Ravens stuff here to be yourself and find your comfort. And so again, I'm not the wise man. My goal here is to be the guide, not the hero ultimately. And just want to share what awesome producers have done to really do two core things, which I've found in this industry. I like to boil it down to two things. We like to help people and make money. And how do we accomplish those goals as a whole? And improve the lives of those that we're working with and able to provide for in the mortgage space, as well as, hey, let's close some loans. Let's get that pipeline going. That's our two goals.
Right on. And, you know, for anyone watching this, whether you're a loan officer, want to be top producer and you're not there yet, you're a top producer, or you're a manager, we all know, like, I interview people that are doing great things, but there's like hearing someone doing great things, and then there's actually implementing it. There's like building the skills, and Spencer and the team here at Mortgage Coach, we're dedicated to helping you. So if you're a branch manager and you're one of our clients, if you're a regional leader and one of our clients, Spencer throughout the call is going to share you, hey, like, where can you get the training to do this? Because we want this to be valuable. Like, you're going to get ideas and you're going to hear how to prepare to win as rates start coming down. So like, this is the frame for the call, guys. So the Fed came out today, or I don't know whether it was a leak or exactly what happened and how it happened, but all I know is the Fed blinked and said that, you know, maybe, you know, we're not going to be as aggressive at raising rates, or maybe they're going to come down. I don't know. I'll listen to Barry Habib and Dan Rawich and find out what's really going to happen. But here's what I know. I know two things for a fact. One, spring home buying season is coming, and you need to prepare to make the most during spring home buying season. I know for a fact rates are coming down. The question is when, how fast, and how low. And then I guess I do have a third fact. I know here at Mortgage Coach and Sales Boomerang, we are essential if you want to optimize your success. And Omid and his team have been using Sales Boomerang. How long have you been on the Sales Boomerang platform, Omid?
I think we've been on the platform for about 2.5 years now. Mortgage Coach, so longer than that.
So 2.5 years. And I interviewed him, was it a week ago? I mean, it was just a week ago when I did my first interview.
Yep.
He, by the way, he killed it. And we really focused a lot on how he's using advice to win in this market, and he killed it. But at the end of that interview, he shared a story of a family that, because he was monitoring his database of Sales Boomerang, it was really a pretty amazing story. And so I wanted to, spend more time on how he is leveraging his database, not only to make the most, because that's what we're going to have to do as rates start coming down. How do we make the most of our database? But how he's leveraging his database now in this market. So, Amit, not everybody who's watching this heard the last interview. Could you just real quick tell everybody what market you're in, what kind of production you're doing, and then we'll get into, you know, strategies that you're going to be implementing right now.
Yeah, absolutely. Hey, everyone. So Amit Singh, thanks again, Dave, for having me on last week. That was awesome. So I'm out here based in Irvine, California. You know, we have a team here. I think the last couple of years, we've done over 200 million in volume this year. Obviously, with the market pulling back a little bit, those numbers have dwindled a little bit, but we're definitely excited for, you know, all the new quantitative easing that's hopefully going to be happening here fairly quickly, and how we're going to be managing our database and utilizing the tools that we have at our disposal to really build 2023 to be one of our biggest years yet. Spencer, thank you, because you have been such a huge part of that, right? One of the things that we didn't really recognize in the beginning of us getting signed up with Sales Boomerang is how really attentive to detail it can be with our client consumers. And it was actually after a training session that we did with Spencer, who, by the way, is a script guru. I love all the scripts that you sent us, Spencer, and we've already implemented so many of those. So if you guys get a chance to meet with Spencer, he's awesome. He'll basically train your whole team up on the platform, and he's going to really get your team rocking and rolling with their ability to start diving into Sales Boomerang and start making the appropriate calls at the appropriate times. But he's actually the one who identified to us how kind of the debt signaling process or the trigger alerts work. And so that's how we now started kind of targeting our past client database. And we have a few clients who have found themselves in kind of the top tier debt levels. And so we started reaching out to a lot of those clients. One of those clients we had just helped buy a home like 3 years prior. They had built a ton of equity in their home, but we saw that their credit score had dramatically, gotten worse. And we'd also seen that their tier, so the amount of debt level that they were in, was in one of the highest tiers. And so naturally, we reached out to them. They were an awesome past client of ours. And, I felt like a failure for not reaching out to them sooner, but thankfully, we caught them before the worst could happen. They had basically gotten themselves into, I think, almost $150,000 in credit card and personal loan debt. And they were definitely struggling financially. And the mother was about to take a leave from work because they had to take care of their sick child. And so she was the primary breadwinner of the family. Her and her wife, ultimately, they were just dealing with a really severe medical issue of their son. And they basically had taken on a bunch of debt. And it was a really sad story. But thankfully, we got to them before she actually took off from work. And because of us reaching out to them at the appropriate time, we were able to help them refinance their home, leverage the equity in their home, clear out all of that debt, get them back on the right track of really being financially secure for the next 6 to 12 months until she can go back to work and the medical issues ultimately were resolved. But it just felt like such a heartwarming win for us, right? We didn't really classify it as a win. It classified it as, this is what our job is. But really, that's kind of the basis of what we do and why we do and why we really manage our database, right? Is to find opportunities like this, not only to generate a loan and to make money, but actually to positively impact people's lives in a way that no financial advisor would have done. No, maybe somebody would have guided them if they had that type of person in their life. But because we were the person who was their strategic debt advisor, we were able to catch them at a time where it was really imperative for them to get some advice and guidance around financial planning, get them in the appropriate loan for the foreseeable future, and now be in a position where they have more reserve funds. They don't have to, resort back into getting into high interest rate credit card debt and falling down that spiral. And so it was just a huge emotional win for us as well, to be able to help a family in that way.
So I want to tie this together, and I want to make sure everybody really gets what took place there. And then, because Spencer was part of this story, I mean, think about it. If Spencer, you hadn't done this training, and these guys hadn't built these skills, and also it's not just skills, it's habits. Hey, you get an alert, you build a habit. This family, may have, well, first of all, they would have been in a worse situation if the mother would have taken a leave of absence. They would have been unfinanceable, and it could have led to the selling of that house. So we're gonna talk about how to make the most as rates start to come down, and we're gonna cover that, because this is what you need to do in your database right now. And so, let's look at this. First of all, if you're not monitoring your database, which, by the way, most realtors don't monitor their database, you don't know what's happening. You don't know when people's credit score went down. You don't know when people's equity goes up. You don't know how much tappable equity folks have. And so, this, by the way, this is what all the biggest mortgage, Rocket, Zillow, they know this stuff. And so you see this one in the middle, this, debt and equity alert, or debt or equity alert, cash out alerts. All these alerts happen. And remember what he said, Spencer and our training team here at MortgageCoach and Sales Boomerang, we got scripts for all these. So we have strategies and scripts for all these, but also want to remind you all that we have automation. where we're going from an alert to a total cost analysis created. And just like an example of this is, notice that every one of these alerts tells how much tappable equity a family member has. So I'm sure the alert that you guys got was something like this: hey, credit's down, equity's up, they had X, probably several $100,000 in tappable equity. And then, guys, this is an actual total cost analysis from an interview I did in the past. It's called a single mom refi, where there was a single mom that needed to do some home improvement, needed to do some debt consolidation, didn't want to go backwards on her mortgage. And we did a debt consol analysis for her. But guys, this is what we're doing. It's first of all, technology is important to this story, but scripting and training is important to this. So Spencer, I want to hand it off to you, because I want this, an idea, track your database, monitor it, but also want you to give some of the training that you gave to Amit to help make this story happen. Give some leadership to anyone watching this, how they can get trained up by us. Amit, why don't you give some feedback on that, just so we have a little training, and then let's talk about another story and another strategy around what we're going to do as rates go down.
Definitely. Let's get to the real world application. And first, I want to start from two things that Amit kind of portrayed. Number one, the role of the advisor, the role of factoring in positive alternatives. And I think setting that expectation has been such a common W for the LOs that have been successful regardless of market, regardless of rates. Setting that expectation up front that you're going to be able to see that capacity, that you will get the debt signal when they get into, the bottoms, when they bottom out a little bit, when there are challenges and obstacles, that you will be there for them, and that they should expect to hear from you about these situations. They're trusting you with that 30-year debt obligation, the biggest debt obligation they're ever going to make, one of the biggest factors and decisions they'll ever come to in their life. So to separate yourselves from the Rocket Mortgages and the Quickens, the role of the advisor and letting that be known. And then what we got into was, guys, we can go search and that cash out that Dave pulled up. I like to think of it more so as the Google alert. We can basically type into our database here and say, I want to see this type of borrower. We're going to focus on credit repair this quarter. That's what we're looking for. Okay, then we're going to set our parameters to see those that are 580 and above, to those that have $10,000 in revolving debt or above, to those that, are in a position where they do have some equity, and then to go have that conversation with them with relevant information. And the way that, especially like Dave said, realtors will just drip. They'll just drip and drip and drip and drip, and they'll flood their database with check-ins. And like we said, that's a good thing, but it's not relevant. And when there's so much information in the media, there's so much noise all the time to them, even if they do have a credit activity, for instance, they get inundated with so much information. And being able to take that relevant info and take the role of the consultant, ask questions, find out goals after you've already refined and have that relevance for them, that is how you end up having the borrower for life situation ultimately. So I think it's imperative to always use the scientific method and test yourself, track, take data, analyze it, and make improvements. And with Sales Boomerang settings, what do you want to be focusing on? What product are you looking for? Each of these alerts, and really the cash out alert that Dave, you touched on, is so powerful to be able to refine your database to see the exact conversations and instances, and it instills that confidence in you. There's no guessing. And another huge thing that I think we skip over here is that this borrower's credit qualified. And if it's a prospect or a lead or a referral or someone that you're not quite as comfortable with, or might not, in better words, be as comfortable with you, you don't need to immediately put up that guard of, well, we have to pull credit to make sure we're not wasting our time here. So when you ask someone to pull credit, what happens? Whoa. Even though the bureaus do allow us, 45 days to have our credit pulled as a consumer, up to 8 times by a lender, to make sure we're, beautifying capitalism the best of our ability, but, making sure we're getting the best rates. If you don't take advantage of the opportunity to know that this person's even just credit qualified, and knowing their debt signal and knowing their equity signal, you can see whatever you want within your database and have the conversations that you're looking for. So refining it over time is essential and allows you to set yourself up for confidence and success to find the borrowers you're looking for. And it's a process. And that's why, you and I met, and your team and ours met, and talked it through. What are we looking for? Who is the ideal buyer? In this past market, it's been the buy down. So where are the buy downs? What does their credit score look like? What does their debt signal look like? What does their tappable equity look like to allow these things to be possible and consider these options? So those are really just the ways that we take the basic sales boomerang is giving us information and turn it into a living, breathing organism inside of our database.
So guys, I just want to make sure, people really connect the dot to what Spencer just said. Like if you do what Amit and his team's doing, you're turning your database into a custom search engine. I love that. And you can really start identifying who are the consumers that you can help. When I interviewed Jay Kroll, who's just an absolute animal, usually does over a couple $100 million a year, did 300 million last year. He's going to do 160 million this year. He talked about like helping people, like this is a market where we need to be a wolf. We need to go out and hunt, and we need to help people. And you can't help people if you don't know what's in your database. And then when you really start looking at the stories of these families, and you look at the kind of impact that you can make, and you look at the number of transactions that consumers do over a lifetime, so here, like we're going to start the conversation of how do we prepare as rates go down. So first of all, we need to realize that our job is different going forward. There's over 8 million families that have an interest rate that starts with a 2 or a 3. You hear that, guys? Like, excuse me, not million, trillion, 8.2 trillion, because we know we just had 2 back-to-back years of 4 trillion in production. So, and we know rates were 2 and 3%. And by the way, here at Sales Boomerang, we know how many loans you're losing. We know what this data is. There's over 8 trillion in debt. So we need to get better at identifying who's most likely to want to buy a second home, who's most likely to want to invest in real estate. And then you know what? We need to know who is most likely, they've got equity that they can refinance their home and rent it out, or how can we help them and show them the numbers that, hey, you could take your house just like it is, rent it out, buy a move-up home. Like the glory days are here, guys, because you have technology. You can monitor your database, and you can really, you notice this little chart right here. Every one of those stars is a real estate agent selling a home. And we need to help real estate agents sell homes. That means we need to have data. So a couple things that I want to make sure everybody gets is you need to have those skills. So Amit, let's flip the call now. Let's like chapter 1, first half of the ball game. Second half of the ball game is rates are starting to come down. Knowing that you guys use MortgageCoach, knowing that you guys use Boomerang, what are you doing to make sure you're prepared to win in 2023 as rates start to go down?
Yeah, I think it's something that we've been doing all year, right? It's setting the appropriate expectations with every single client as to what we are going to be doing for them over the course of the next 6, 12, 24 months in that short term to, one, make them feel confident in their decision to purchase a home in a high interest rate environment like we've seen over the course of the last 7, 8 months, and 2, recognize the opportunity that they're going to have in the next 12 to 24 months to be able to get themselves in the best long-term position, right? So that's how we're basically posing it to every single client right now, is that, the 3 of us know that interest rates are going to drop next year. Consumers see the market, jumping up dramatically. They hear the news that the market is crashing. They hear that rates are going to go to the moon. And, it's not conducive to a healthy mindset in the average consumer right now, right? So anybody that we get an opportunity to speak with, get an opportunity to present to, we're showing them what the market looks like today, but we're also basically implementing in their mind that, hey, just because the market is at where it's at today doesn't necessarily mean that that's what it's going to look like for you forever, right? And once people recognize that, and now we've got, valid data that's showing that, the Fed is going to be practicing some quantitative easing here in the near future, and we're going to be seeing interest rates already dropped down today pretty dramatically. But that's basically what we're doing with every single one of our TCAs right now. If we have a client that's looking at homes in, the 500, 600, 700K price range, but theoretically their comfortability level right now would only put them at a 400K price range because of where home prices are right now. We'll show them, hey, this is what it looks like, but this is what it's going to look like likely for the next 6 to 12 months, right? So if we can figure out a way to get your closing costs covered, get a large enough seller credit to where you can now hold on to some additional capital in the bank, so that way you can stomach maybe a $600, $700, $800 a month more mortgage payment for the next 6 to 12 months, and then show them that, hey, we're expecting rates to probably come back sub 5% early next year, or as early as next year. And that's where we have an opportunity to now get to that $600,000 home and get it at the $400,000 home payment as of where the market is at its peak in the last couple of months, right? So that's one of the strategies. I have a little TCA if you don't mind me sharing, where I kind of go through what we're doing for those clients right now. Is that all right if I share my screen right now?
Yeah, go for it.
Oh, Dave, I think you might be muted.
Yeah, wait a minute. Before you share it, guys, I want to sequence this, because I want to make sure it's technology, it's scripting, and it's skill. So I do know, because the script I'm going to show on the screen right now, remember guys, we have scripts for all of these things, but part of what they're doing at the point of sale is they're differentiating, and I don't know if this is exactly your script and your team script, Amit, but I know it's within this genre that, hey, my advice helps you build wealth with real estate faster, because I'm going to help you make a smarter decision. And he's going to show you in a minute, like, I wanted to put this in context. He's going to show that. And then we're going to proactively coach you over time. My team is going to help coach you over time to ensure you always have the best mortgage. So he's either saying that script or something very similar to that. And then why don't you go ahead and show us the TCA that you're using. And then guys, we're going to play this out. We're going to show you what's happening at the point of sale right now. And then we're going to play this out that as rates really start to come down, and I don't know if like we just hit the top of the mountain and they're coming down, or that's going to happen in a month, 2 months, 3 months. I do believe throughout the year they're going to come down. And guys, this call is all about starting that conversation, starting that preparation, making
setting
sure
the expectation.
Exactly. So show that TCA now, and then let's just play this out, guys.
Yeah. So I'll just kind of briefly go over. This is something that we have a client who we just met with earlier today. They're looking at buying a new primary residence out in Colorado, first-time home buyer. They're currently renting. They ideally wanted a mortgage payment that was going to be right around $3,200 a month. And they were looking at homes ranging from 500 to 700,000, right? So with where interest rates are at right now, it's going to be very difficult to get that payment in the ideal range of where they wanted. And that's where, I hate to say it, but a mediocre loan officer, right, is going to hand someone a piece of paper that basically says, hey, here's a $600,000 home payment, and there's a $4,000 a month mortgage payment attached to it. Right. And the average
or what Rocket Mortgage is going
or
to
Rocket Mortgage, or
them.
click button, get mortgage, whatever it is. The client's going to see that monthly payment. They're going to get cold feet. They're going to get scared, and they don't think it's the right time to buy. The real estate agent who sent that client over to maybe that loan officer is going to be like, oh, well, thank you so much for pre-approving my client, Mr. Loan Officer. Unfortunately, they just decided that it wasn't the right time. Right. And that's because that client wasn't converted. Right. They weren't shown why taking on maybe an $800 a month more of a mortgage payment is going to make sense to still go out there and start shopping for homes in the environment that we're in, because nobody explained to them what the longer term vision was going to look like for that property and for their, financial worlds. And so basically what we did was we showed them, okay, here's the 500 to $700,000 price points. He was looking at putting 10% down. Here's where interest rates were at as of today. And then here's where the monthly payments were, right? We were looking at $3,300 at the low end, all the way up to $4,700 a month at the high end. Now, right at the gates, when that client saw those monthly payments, they kind of freaked out a little bit, right? They're like, oh, wow, that's more, we should probably start looking at homes in like the $450,000 price range, right? But when we were on the call, the wife basically said, well, we're not finding anything that even is remotely suitable for what we need in those price points, right? And so that's where we kind of go into the conversion aspect, right? That's where we basically start showing them, okay, well, this is what your payment looks like right now, but let's not get hung up on what right now looks like, because right now is going to look very different than 6 months from now, 12 months from now. And in my history of being in this industry, almost every single one of our clients we've done a refinance for in the past, right? And given what we know that's coming in the market right now, we have to advise our clients, right? Like we showed them in that meeting, like, hey, look what just happened today. Interest rates literally while we were on our call just dropped down 1/4 of a point, right? And so that's super exciting because that's already showing us that we're trending in the right direction. But what is that also doing, right? If we start to see interest rates drop down like that, we're going to start to see home prices, gradually start to come up again. Now, I don't believe that they're going to start catapulting the way they have over the course of the last 2.5 years, but we're definitely going to start to see more of a flattening out of the market, stabilization, and ultimately gradual appreciation, the way a normal market should look like, right? But ultimately, if we start to see interest rates get sub 5% again, which is a lot of the chatter that I'm hearing is likely to happen next year, right? And so if we start to see interest rates go back into the mid 4% range, well, guess what? That $600K home that they bought, that they paid $4,000 a month for the next 6 to 12 months, is not going to be looking like a monthly payment of closer to $3,200. And that's exactly where they want it to be comfortable, right? And so if I did not show them this, they would have just seen that monthly payment and said, I can't buy anymore, right? Just because it's not the right time. I'm gonna have to wait until rates come down. And if rates ultimately do come back down to, mid 4% range, we may not be looking at the same home price right now, right? And so now they may be looking at a 640, 650K home price with a monthly payment that's even higher than what we're looking at right now, higher property taxes, the works. And so now this client's super excited. They're like, yeah, we have the savings to be able to stash the, $7,000 that it's going to take for us to hold ourselves over the course of the next 6 to 12 months to make that extra monthly payment. And then we're excited because we know that Amit, you and your team are monitoring our mortgage for us. We're looking out for all of those opportunities to refinance that loan. And maybe we don't refinance them at 4.5. Maybe we refinance them at 5.5 or 5.25, or on the way down, we get them a couple of times, right? As the market kind of drops and, softens a little bit, drops and softens a little bit again, there could be 2, 3, 4 deals that come out of it over the course of the next 2 years, all of which are ultimately helping the consumer, right? And so this is what ultimately converts that client from the client who says, I can't purchase a home in today's market. It takes the realtor who sent us over that lead and says, my client got cold feet, and turns it into a client who's like, wow, this is a really good opportunity. I'm not going to have a tremendous amount of competition right now. Mr. Realtor, Mrs. Realtor, I want to get out there and start shopping for homes immediately, because the sooner I do this, the sooner I can ultimately get into a home, ultimately build the equity and get that refinance down for us to get that monthly payment at a comfortable level. And now I've been converted, right? I'm a client who's no longer unmotivated, no longer scared, and is more excited and confident to get out there and start shopping for homes.
So guys, this is, to me, this is so powerful. If you could stop sharing your screen for a minute.
Yep, I did.
And I want to share my screen, and then Spencer, I'm going to have you take it over and, really close this thing out. Take as much time as you want, because I want to make sure that what everyone is hearing, they're able to implement. So again, you saw the experience that he's providing. You heard the scripting that he had. Now, if you're a loan officer that delivers something like this, does this align with this, this promise, or it looks like this, where it's not value, it's rate, it's payment, it's cash to close, or it's an email breaking down the fees? First of all, you can't do what he just did and show that marry the house, it's a great time, much better than last year, but you're renting the rate. Like, you can't do this. You can just present a quote. And then here's the other part, guys. As rates start to come down, part of our services is we're watching the rates. We know what the data has. We know what they closed. We know what the market is, and we're able to give you an alert. And we're able to identify in your database. And by the way, if you got your realtor to give you their database so that you can identify all the people who are most likely to move up, the people that have the most tappable equity, the people, you're going to get these alerts. And then it's automatically creating these presentations, where here's your current rate, here's your refinance, here's your savings. What if you took that savings and applied it against the mortgage? How to build wealth with real estate. Guys, if you're not doing this, if you're not trained, if you don't have great scripts, if you don't have the right tech, you can't make the most of interest rates going down. So anyways, two big ideas, guys. We gave you one that is super on point right now with high interest rates, and why you need to be monitoring your database and why you need insights that are integrated with strategies, TCA strategies. And then we also showed you a tactic and a strategy that could just literally, like the salmon are running, and even while you're sleeping, you can be identifying these. So Spencer, any questions for Amit, or anything you want to make sure everyone hears from a training perspective so that they can really operationalize what we're talking about here?
It cracks me up, Dave, that you bring up the salmon analogy, because, and I'm going to segue into a couple points and then kick it back to Amit. But I like to think of it like this: my brain is a strange place, but ultimately there's the old adage, you can teach a man to fish, you can hand a man a fish. When you have the automated practice and the confidence like Amit you have, and are able to have these TCAs on deck, able to have pre-recorded videos and have it flow from that signal through the insight to the strategy in that automated process. It's a weird thing to say, but this is how my brain works. It's like sitting back on the beach, sipping pina coladas, while Sales Boomerang and Mortgage Coach are just bringing you like credit qualified fish and slapping them on your grill for you. It's like casting a big automated net. And Dave, you brought up something earlier that you say, you know, it's important to be first. And I want to quantify exactly how important it is to be first, and touch on something that I don't think we have yet. According to the CFPB, the authority on this, guys, 4 out of 5 borrowers are going with the first lender they speak with. So when you use these opportunities, these cash out opportunities, these insights from those signals, you are going to go to the Hall of Fame. If you're a baseball hitter, you're going to be in the Hall of Fame as a quarterback. If you're getting 4 out of 5 because you're first with a proactive opportunity and a proactive conversation, considering it, and then helping Amit, essentially what you brought up was that same slide Dave touched on earlier. Helping a borrower, not just yourself to understand, but the borrower understand, here's where you are in your borrowing journey. You are, okay, this borrower you're mentioning moving to Colorado, let's call that their second purchase. Here's what precedes. Here's how we're going to get to the ultimate goal. And as your mortgage advisor, with your mortgage under my management, my goal is not for you to be a loan owner. It's for you to be a homeowner. I want you to pay off your debts. I want you to be debt free. That is my goal as your mortgage advisor. So Amit, I wanted to touch on with you, those conversations you were getting into, and the ways that you feel confident of what makes you basically feel sound heading into 2023. You mentioned that you've already gone through and done that legwork of anticipating and creating that expectation that this is what you're going to do. So when you have these examples that make you just kind of feel good when you're going to bed at night of, okay, we're ready for 2023, we're ready, we're prepared. How are you using the Sales Boomerang process? How are you using your Mortgage Coach presentations to get into that zone of feeling like I am ready to rock and roll? What is what you're really going to hang your hat on headed into 2023?
Yeah, I think first and foremost, I think 2023 at the bare minimum should have at least the exact same amount of transactions as 2022, right? Because at the end of the day, every single person that we have helped in 2022, barring maybe someone who closed in January or February, is absolutely going to be doing another transaction with us next year, right? And potentially too, if we get them in February and then we get them again in November, right? We always got to watch out for those EPOs, but that's another tool that Sales Boomerang helps with, right? The mortgage inquiry alerts. We can avoid EPOs in a lot of sense, or at least if the EPO is unavoidable, we can at least catch it to where we actually get the revenue on the new deal as well. But first and foremost, right?
So guys, I just want to make sure you guys heard that. Yes, we have EPO alerts. Yes, we have reverse mortgage alerts. Everything that's happening in your database that could be a loan in a transaction, purchase or refi, we're the leaders at that. Like, we have the best data science team. We have the most data. So if you want to optimize it, we have alerts for it. Anyway, sorry to cut you off, man.
No,
you just laid that
good.
up for
I
me.
love it.
Like, little ball. I need to hit.
But yeah, so I mean, right now you guys kind of saw what we're doing with every single one of our clients who is actively looking at purchasing home in the environment that we're in today. We're basically setting themselves up for a refinance in the next 6 to 12 months, right? And so all of those clients, we're going to be doing a refi for in the next 12 months. And then, if we go back to that screen that you were looking at earlier, right? The HELOC.
Which one?
the basically the borrower's journey over the
Oh
course
yeah,
of
yeah,
their
yeah,
lifetime.
yeah. I
Uh,
love that screen.
so one of those that I saw in there in 2025, right, is a home equity line of credit. Over the course of the last 9-10 months, right, one thing that we've been talking to with so many of our past clients, so many of our current clients who have built or past clients who have built a tremendous amount of equity in their homes, right, we've basically just been doing annual financial reviews with them, and we're helping them identify opportunities to obtain a line of credit on their property, regardless of whether or not they need the money or if they want to tap into it or borrow against it. We're basically highlighting the opportunities that a HELOC brings to the table in the event that they want to make some quick moves or finance some quick investment opportunities, right? And so one of the big things that I've pushed over the last 12 months is having a HELOC in place. So that way, if you see a home, like one of the big things that we push a lot, right, is buying investment properties potentially out of state, right? Because that's where right now, and potentially in state as well. But we've seen, me personally, we've seen a tremendous amount of opportunities in states where homes have much more affordable price points, much more opportunities to be cash flow even or cash flow positive on homes. And so we've been pushing that a lot, right? So this is one of the ways that we've been able to show clients how we're actually able to help them create more wealth over time, is by showing them how they can acquire more real estate over time through strategic financing and through the opportunity of opening up a HELOC. And so there's a ton of clients that we've worked with over the course of the last 10 months who we've identified opportunities in other states where they have opened up a HELOC. They've tapped into that HELOC to fund the down payment of the new investment property out of state. And it's not as much as it would be for a home out here in California. So the HELOCs are maybe $100,000, $150,000, and they're maybe drawing $60,000, $70,000, $100,000 from it. But now they've got 2 properties, right? And they've basically used the equity that they've built in the current home to be able to fund the down payment on the new property. So not only now do we have a client who has a second mortgage on their property that when interest rates ultimately do fall, we can help them consolidate those 2 loans and get them into the best long-term position. We've also now created an opportunity for ourselves to help that person finance a new investment property, which again, in the next 6 to 12 months, we're going to have an opportunity likely to refinance that loan as well and get them into the best cash flow position on that investment home as well. So that's kind of what we've been talking about with every single one of our clients, right? Even if you don't need it right away, if you see an opportunity, or if we identify that, hey, this market is really hot right now, we were talking about this 2-3 months ago, now is a really good time to strike. A client has the ability to pull that money out. We know from a qualification perspective, everything looks solid. And so now they've bought into an environment where interest rates are still higher again, and we now have the opportunity to get their monthly payments down in the next 6 to 12 months. So it's just going to allow us to, 2023 is going to be a huge refinance year again. And whether that's cash out, whether that's, rate and term to reduce interest rates from homes that are bought this year, there's going to be a tremendous amount of opportunity. And so that's what we're trying to highlight. Consumer debt, as I'm sure you guys know, is at an all-time high. And so there's going to be a lot of people who are likely going to need to tap into either a HELOC or a cash out refinance, but giving the appropriate guidance, setting themselves up appropriately. If you just tell someone to get a HELOC and they're not really financially savvy, right, they're just going to tap into that HELOC and then get back into the same debt position that they were in before, right? But ultimately, it takes a true debt advisor to help them get out of that. And we're going to be basically helping them manage their budgets down the line as well. And so those are other tools that we have also. But to tie it back to what Sales Boomerang and what Mortgage Coach does for us, right, is one of the things that we're trying to implement right now is in our CRM, basically connecting Mortgage Coach to it to ultimately send out mass amounts of TCAs to clients who we worked with in the past, to ultimately make the efficiency process of showing a client why a refinance makes sense just that much more simple, right? It sends out an email, it sends out a text message, creates an automatic TCA for them as well. And so that's what we're working on building out right now. And that's, I think, going to be a huge part of our ability to manage our database at the highest level in an environment where there's going to be a ton of people likely reaching out to our past clients. And that's how we're going to be able to get to them first.
Love it. So guys, we're going to wrap this up, but I want you to really start thinking about the lifetime value of your customers and managing them appropriately. One of the things we do in our sales process here at Mortgage Coach and Sales Boomerang is you give us your database and we'll tell you, how many cash out refis are in there, how many FHA, rate and term, like whatever it is that you're targeting, we'll show you that. We'll show you how many loans you're losing. Like this is what we do. We have this data. So if you're already a customer and you already have both Mortgage Coach and Sales Boomerang, Spencer's going to close this with telling you how to reach out to him, how to get on the schedule to get some training so that our team creates a ninja, like Amit and his team. If you don't have both Sales Boomerang and Mortgage Coach and you want to really audit the opportunity in your database, there'll be a link down below. I mean, obviously you could go to either Sales Boomerang or Mortgage Coach and fill out a link for a demo. You could email me at Dave@MortgageCoach, and I'll be close to the sales process. And I'll put a link down below where you guys can click. We want to really help lenders be prepared to crush it. Every lead, every loan, every basis point matters. And you're not getting every lead if you don't have your database monitored by Sales Boomerang. You're not getting every loan if you're not delivering a Mortgage Coach total cost analysis experience. And you're not getting every basis points. I mean, we've done enough case studies on this that Mortgage Coach loan officers are 9 basis point more profitable than those that don't. We've had some of the largest lenders in the country, 2 top 10 lenders, do a case study on this, where loan officers that use Mortgage Coach are like 34% more profitable and spend less than 9 basis points. So if you're a manager listening to this, like, are basis points valuable? If you could literally implement a platform like Mortgage Coach and Sales Boomerang, get more loans, have more profits, what would that be valuable? So, reach out to us. We want to meet with you. We want to audit your database. Spencer, for all the people that are, customers watching this right now, how can they make sure they optimize what they're doing, and how can they reach out to you or our team and get the training they need?
Most certainly. Well said, Dave. And the way that we're going to operate is by becoming efficient guys. We're going to examine ourselves, always using the scientific method, tracking our data, analyzing. Basically, the most simple thing you can do to start that process. And I like to think of it like this. We're starting off the rack. We're going to pull a suit off. It's our first suit. It's going to look good. We're going to figure it out. We're going to hit it. We're going to go to salesboomerang.com. I'm going to drop the link in just so it's that simple. You can't even miss it. Salesboomerang.com. And I'm going to share my screen really quickly. And we're going to go to the front page resources tab right here. You can find training, events, and webinars. We do a training, guys, every Tuesday at 3:30 Eastern. They're recorded. We do Sales Boomerang 101, 201, and 301, starting with the basics and getting through best practices, advanced practices, how to make sure that we're keeping ourselves accountable with our data, our analytics, our tracking, and continuing to improve. You simply can click register, fill in first name, last name, and email, and you can find any of those. We also do a market relevant training at the end of every single month. And for a custom tailored suit of a training for you and your team, if you're a branch manager, if you're an admin, if you're in marketing, and you want this specific to your team, attend one of those, and then we'll just plug along through. You can get in contact with your customer success manager or by reaching out to your admin of Sales Boomerang, or when you're in one of my trainings in there, just drop your organization and I will set it up for you from there, guys. It's that easy, and we'll hold ourselves accountable together. We'll sharpen our swords and continue to help people and make some money in the process. That's what it's all about, my friends.
All right, guys. And as we are merging, both Sales Boomerang and Mortgage Coach, we also have training on the Mortgage Coach website. If you click on resources, there's on demand. Again, this is not for the alert part of our product, the insights. This is for the presentations, but 24/7 training. We are going to get these merged into one place. On the Mortgage Coach side, we're doing daily training every Monday for beginners, every Wednesday for just group strategy training, every Thursday Q&A training. So guys, we're here to help. Hopefully you got value from this. If you did get value, wherever you're watching this in social media, give us a like. If you're watching this on our YouTube channel, give it a like. Share this with your mortgage friends. Share this with your managers. We really want to help you guys make the most as rates start to go down, go from high to low. How do you optimize that today? And how do you optimize that tomorrow? Hey, Amit, you are an awesome Mortgage Coach, rock star. Thank you for making time to give back to the industry. I think you're traveling for the next couple of days. but just really appreciate you, brother.
Of course. Happy to be there. Good seeing you,
All
Dave.
right.
Good seeing you, Spence.
Right. And then Spencer, this is our first collab. Let's do more of this. It was awesome doing this call with you, and I think it gave a whole new layer of value. So looking forward to doing more collaborations like this.
100%. Good things on the way. Thank you so much, everyone.
All right. Take care, y'all.